Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Still a little under the weather here. I will try to keep this as understandable as possible. Sadly, many people remain surprised that GBTC is continuing its fire sale. In any case, they only have 550,000 BTC left. Now look, this isn't Barry selling most of this, most likely. He's got a slice, I'm sure. Grayscale's got a slice. Everybody's got a slice, right? Some of that's going to other ETFs. Okay, there's positive flows, whatever. But look, this is going to be a long game, most likely. If you had to bet today, do you think this is going to be done this week, this month, or at the end of the quarter, right? I'll take the long odds on the end of the quarter there. But slowly but surely, these coins are being distributed amongst the healthier ETFs based on fees. So far, our peak total BTC in the ETF ecosystem, somewhere around 650,000 BTC. So look, this is the only thing that matters, and that's the only thing that's going to continue to matter. These outflows are just devastating. Even if the net inflows are positive, it's a very clear market signal to anybody with half of a quarter of a brain what's going on here. So why wouldn't you just wait? Why wouldn't you just wait for the dumping to stop and then figure it out? Or wait for your favorite price that's probably lower and buy there. Not only haven't we seen a decrease in the selling, but we've seen an uptick in the selling slightly. So by any measure you can think of, it doesn't look like this is going to stop anytime soon. And they certainly aren't going to have inflows based on that fee. And we're pre-having anyway, it doesn't matter. We've hit our logical target on the 618. I'll talk about that in a second. But none of this is exactly out of character, regardless of what's going on. There's always a reason why we go where we go, and then we go down where we go down. That's just how it is. If we look at all the flows in USD terms, again, it's pretty rough to deal with. 500 million. I mean, I'm impressed that we've seen the flows we have seen as far as on the inflow side. The other thing you got to understand is, look, this stuff isn't automatically listed day one everywhere in the universe, okay? It takes time for this stuff to get listed into places where people have all the money. So once again, we're going to see faster outflows than inflows. We will win. It's over. We have infiltrated Wall Street. GG. No re. It's a matter of time. Okay? We are slow creeping mold that is just going to take over. In the near term, that's painful because of the unwind from GBTC, but it's not really too much of a concern, honestly. So we go to what, 28, 30? Who cares? I'm trying to find, here we go. If we estimate the time it's going to take, assuming the outflows remain at about 500 million a day, that's 10 billion a month. And if this drains to zero, which I don't think it's going to drain to zero, that brings us to what, April something? They've drained 10 to 15% of it so far. We'll see if it slows down, if price goes down. I don't know. Nobody knows, right? You just gotta enjoy the fun while it lasts, and probably do nothing while it's happening, because that's what looks like is going on across the market. Someone had a question about value days destroyed, and in order to understand that chart, you have to know what coin days destroyed are. So if you've got 5 BTC that you don't move for 100 days, it accumulates 500 coin days. So if we look at the entire network, right, it's basically the unhodling metric. If you're just this fervent holder, and then in 2018, boom, we hit your price, baby, and it's gone, that's a massive coin days destroyed. I think a lot of this spike here was actually Roger Ver selling his coins, which he had for many, many years prior. Anyway, we haven't really seen much of that other than very recently, right, where price goes up quickly, or there's some event, or something happens, right? Or if there's some miner selling for whatever reason, this was a miner, this was a miner, this was a news event. So it's either a type of capitulation towards the upside or the downside, or some news event, really. That's what spikes coin days destroyed. So clearly the ETF helping that. What value days destroyed does is looks at coin days destroyed times the price, so multiplied by the price the coin was moved at, and then it applies the velocity metric to VDD to give you the multiple. And this has spiked quite a bit recently as well. And all this stuff kind of makes sense. You know, a lot of people were moving coins around the ETF based on the news, thinking we'd go higher or not. And now you've got all of the on-chain metrics from here on out are, to me, completely different, potentially because we have all these custodians for all these ETFs. There may or may not be off-chain transactions here. You've got Grayscale unlocking an ungodly amount of coin that's been sitting dormant. Okay, that's going to be communicating with all of these on-chain metrics forever. And until that settles down, you know, that's going to blow out any CoinDays destroyed number. That's going to blow out all of this stuff, right? So it's an unnatural disturbance in the force, right? And you got to keep that in mind with on-chain metrics. But yes, it does align with what you'd expect naturally when something like this spikes, where it's probably a top or a local top in the market. We can also look at the hodl waves, which applies an age band to when coins are moved. And one thing you'll notice is over time, coins continuously age to the older bands because less coins move on any given day. So if we also apply a realized price to the hodl waves, this also helps us, you know, it embellishes those levels a little bit to give us some idea of the intensity at those price levels. So here, you know, we did have a little peak up in realized cap hodl waves on the lower age bands. So there was a lot of movement from the traders and the tourists and the opportunists, whatever, right? But nothing unexpected for a pre-halving year. Now, if we look at, I keep saying year, pre-halving period, whatever. If we look at a year from halving, a year from April, right, we will probably see something like we saw in 2016, just continuous spiking on the realized cap hodl waves. What I think people are not prepared for is they will be selling their coins to Wall Street or to ETFs, and we will continue to go higher. That's completely what I expect here. I think the ETF effect will be underestimated. And once again, you know, we're going to have to go back to questioning on-chain data a little bit because it is a different ecosystem now. Just like on-chain data is affected by the ordinals crap, right? That changes things, you know. We didn't have ordinals before 2023 and things change. So you just got to keep that in mind. Just because we've hit X level at X period of time doesn't always necessarily mean in the future that we could expect the same. It will be very likely similar because there will just be an overwhelming amount of coins being sold, but just keep that in mind. So far so good here. I mean, look, there's nothing to do this week. I think for most people, for this month, there's nothing to do in crypto trading. I'll get to the charts in a second. They don't look compelling for any reason. Go trade triple Q or something, right? MVRV also turning down here, not quite reaching 2019 levels, not even reaching 2 on the multiplier there, but has turned down now. So that's what we want to see. You know, let everything reset. Let the momentum indicators reset. As far as the long-term power law, the long-term rainbow, right? All this stuff looks incredible still. And if we go lower, I buy more. I mean, I don't really care what the price is, right? Well, where are we going to go? 35, 28, 12? I don't know. I don't think we're going to 12, but these look fine. You know, this is an interesting halving price regression. Rainbow chart gives you some sense of where we might be post-halving in those upper bands, but you know, look, we're exactly where we should be. Someone else who's been selling a lot has been the miners. Now, they haven't been selling a ton, to be fair, but it doesn't help the situation. They are natural sellers. They put money into the ecosystem. They expect to get X out of the ecosystem. They can hold coins, sell coins, whatever. But this graph on the left here, you can see on aggregate the miner to exchange flow, assuming those are sales, which I will, did sort of perk up, spike up a little bit in recent weeks. Now it's not, double the GBTC sales, but it is a pretty decent spike relative to where they normally send coins to exchanges. So it's just one more thing that on top of everything else, you know, we have OI unwinding a little bit, not too crazy, but it's just tons of headwinds. They're just blowing your face off with headwinds right now. Okay. That's why price has just kind of done nothing. Looking at the price chart here, you know, again, there's nothing compelling here at first glance. VPVR has support at 37.5. Pitchfork has a midpoint down there at 35-ish, right? Assuming we go straight down. If you believe that we hit the maximum resistance, right, on the midpoint, it's natural that we drift now towards this midpoint. Regardless of whatever's going on, it certainly helps that GBTC is selling what they're selling every day. I know a lot of people want 30 or less. I don't know about that. I think we will figure it out around 35 for whatever reason. Weekly cloud also exactly where you'd expect us to be pre-halving. We did not hold above the cloud. We've still got tons of time to make a twist here on the cloud. 32 would be the Kijun level on the cloud. So I think collectively, not only are people watching the GBTC sales, but they're saying, look, we're up X% in 3 months. I don't want this until it's turned back 50% or whatever, right? So that's, again, why the 30s make a little bit more sense, where we may see some bids coming back into the market. But you cannot say that GBTC has no effect on the market, because clearly it does. Okay, so everybody that thinks that, well, I don't think those are serious people. The daily cloud is one of the most perfect examples of a trendless situation. We're above the cloud, we're bullish. Cloud is green, we're bullish. Okay, I'll give you that. Below the Kijun, never like that. TK line's flat. They will cross here probably this week. There's some potential that we retest 45 or something, we make some sort of inverted head and shoulders, or if GBTC stops selling, then we can go up again. All that is totally possible. I'm just assuming that they're not going to stop selling. So if they do, we'll be okay. It's almost better if they don't stop selling. It's better if they just keep going and just sell us off into Q2. I think the trade remaining here that I talked about a couple of weeks ago would be a bearish edge-to-edge short trade, which has considerable risk because, again, that's sort of relying on GBTC continuing to sell. But I think that's a fair bet in any regard. Your stop loss on the trade could be if GBTC has a less than 500 million sale day, okay, I cut my short, like that seems pretty easy. But there's support at the bottom of the cloud, as there always is. There's a yearly pivot down there. The 20-week moving average is also down there. So I think this whole region up until mid-February, perfectly reasonable. I don't think there's any chart pattern up here that's going to save us. The Wycovian people are going to say this is probably distribution or something, but to me, this just looks like a vanilla short trade setup on the daily. And then we can come back in April. We can have this bullish Kumo breakout all over again, probably, in the high 30s is where we're going to settle leading into April. That is a much easier long trade than just hoping we go up from here when it just doesn't feel like it. Alligator Fractal also already telling you this has flipped gears as of a few days ago now on the moving averages. We've broken below the support fractals. We've gotten stopped out of any long on that down day. So any short trades here would have a stop loss at 43.6 or whatever that is based on the resistance fractal. So this certainly doesn't look bullish on low time frames. ETH still working its way through the weekly cloud. I don't know. I don't think there's much of a trade left here at this point in the moment. It needs BTC to not fall off a cliff. I know a lot of people are sort of banking on this ETH ETF stuff. And yeah, go for it. I mean, that's a trade, I guess, but you got to hope that the rest of the market follows through with that. And you really got to hope that ETH goes one way and BTC goes another, because BTC clearly selling off pretty hard since the ETF. Some support down here on the weekly 1850, 1950. The Kijun is there. So I don't think ETH is going to fall off a cliff. I just think the better trade is to wait than to try to force something up here because you think, ETH is next on the ETF bandwagon or something. The daily TK cross is likely to occur here pretty soon. And that would tell you to hop out of anything you got into down here. So once again, it's just there's just not a lot of meat left on the bone, Now, I will say in a bearish market environment, generally that's when you want to look at these pair trades, which people already have. Obviously, they've done this via ETF speculation. This is the best ETH BTC has looked probably since mid-2022. This probably would qualify as a high and tight flag. If I was expecting more on this if I was long. I'm not, directly long ETH BTC by any means, but higher for ETH BTC could take it to 6.7 to 7.1. But you just have to pray to anybody listening that ETH does not sell off with Bitcoin if Bitcoin sells off, or just sells off a little bit less, I guess. But that's where I'd expect this to go on any higher high. Now, the rest of these charts for crypto, again, it's done. The trades are done. Some of them have potentially a falling wedge type setup, but these will flip bearish on the TK cross this week, almost guaranteed. Sol may move through the daily cloud. That's one setup you could take. If everything rolls over, I like 32 on Sol, but any trades opened at 20 should definitely be closed up here pretty soon based on what the cloud is telling you. Now, this could go flat. You may get a bullish TK recross with price above cloud, but in the moment, it's telling you momentum is definitely gone, and anything down here on the daily that broke out is Dunsky. Cardano, very much the same. If anything, this is an inverted cup and handle. That looks quite angry. Sub 37, sub wherever this broke out, much better place. I think a lot of people would be looking to get in at that level. But up here, I think it's going to be tough. I think this will flip through the daily cloud. DOT, pretty clear head and shoulders. Yes, all of these might look good on the weekly cloud. That's fine. But in the near term, they do not look good. They look real bad. If you're bullish, they look bad. If you're bearish, they look great. But this too should flip bearish on the TK cross. Almost certainly this breaks down as a head and shoulders and probably reaches for 5 or less. AVAX, again, inverted cup and handle type thing, bearish TK cross coming up. All this stuff. There's nothing left to trade here on the long side from my perspective. I would much rather see this back in the 20s than think about struggling with anything up here. The cloud clearly telling you, stay out. Link had looked okay. It still doesn't look terrible, but it had a bearish TK cross a couple days ago. And, Link with an edge to edge move from 15 to 12, perfectly reasonable. I'm kind of expecting all this stuff to spill lower, mainly because I just don't expect the inflows on the ETF side to continue to keep up with the outflows of GBTC. I'll happily be wrong there, but that's a lot to overcome consistently, right? But we might see it. We've got Legacy popping off, which really helps us. If Legacy was rolling over, it'd be a different video today, let me tell you. We would be probably sub 40 on BTC if Legacy was rolling over. Anyway, this looks okay in the moment. This may flip bullish again, but there's no immediate urgency to be long on that trade here. Flip into Legacy real quick. Coin down over 30% from the top. Just brutality. Miners, absolute brutality, down almost 50% from the top. At some point, it makes sense to step in here just based on horizontal levels, probably closer to 110. I think anything below 100 is a massive buy just based on the amount of volume Coinbase is seeing this quarter from the ETFs on the Bitcoin side. If it gets back to 70s, I think that's an amazing level based on fundamentals, right? I'm not talking about technicals. Technicals on this thing look pretty bearish here in the moment. MSTR, same thing. Just absolutely brutalized since the ETF. I don't think this goes back to 350, but that's a great horizontal level. Long term, this stuff is great, but in the short term, I think there are a lot of people that got trapped at, coin as an example, 140 plus, a lot of people trapped. So it's going to take some time, but anything below 110 for sure on coin. And then lastly, real quick about the yield curve stuff. I'll talk more about this tomorrow, but the yield curve still has plenty of room to uninvert, and we're not in trouble in the economy until we uninvert. This is the 10-2. Historically, you can see it there with unemployment, which remains fine. So why would the Fed do anything here, right? Now, if you listen to Cam Harvey, the, inventor / creator of this metric, what he likes to use is 10-3. He says it's never been wrong. 8 out of 8. This has even farther to go to uninvert. So look, I'm not worried about the economy. You know, we can talk about doom and gloom, XYZ narrative. Okay, but look, this looks fine. So until it doesn't, then we have time to run here. If you want to listen to Cam Harvey, Blockworks did a sit down with him. Very interesting listen, definitely recommend. And, you know, I wouldn't get too strung up waiting for a Fed cut because they're not cutting this meeting. Probably not cutting in March, at least at this point. And that leaves us to May. And then the question is, how close do we want to start cutting into the presidential election cycle? If inflation is in fact closer to 2%, how restrictive do we want to be? And then the third option is, of course, if the economy's off the rails, do we have to cut at that point? So trueflation is down sub 2% at this point. Many other Fed metrics are down, PCE, core, blah, 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 sub 2% or will be in the coming months. And I hope that they ask him this in the press conference at the end of the month. Hey, by the way, your metrics look pretty good. We've reached your levels. Yes, unemployment is fine, but how restrictive do you want to be? That would be amazing to hear that answer. We'll see what he says. We'll see if they ask it. I'm sure somebody will. And look, if they want to maintain anything above 5% and the economy's cruising and jobs are blah, 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 and we're doing full employment and things look good, then go for it, right? There's no urgency whatsoever for 6 cuts this year. I don't know what this probability stuff is here. It's like expecting a 75 cut in March or something. I don't know what's going on there. May, whatever. They're probably going to come out mid-year, cut 25 3 times, and then hold it there. And that's it, right? That's probably what's going to happen unless the economy explodes, which doesn't look like it's going to happen anytime soon. So anyway, that's Setup Sunday. Like, dislike, comment, share, subscribe, and happy trading.